Hey everybody, welcome to this week's Fairfax Friday. Today is Friday, August 28th, and as always, I'll be trying to filter out some information. Mark will put things in perspective, and Lisa's going to answer some questions, commonly asked questions that we get from clients. So this week, the big news of the week is the Fed's shift to keep interest rates low for a long time. And essentially what that means for the average American out there is low interest rates on your mortgage. It's going to cost you less to buy a car. You can buy a bigger house for the same amount of payment. And for retirees, it's not necessarily a positive thing because interest rates, if you want to buy bonds or buy CDs or use any sort of fixed income instrument, it's going to be crediting very, very low. In fact, I read an article earlier this week in the Wall Street Journal that money market funds actually had cut fees to zero because otherwise they would actually have a negative return. So there's some good and some bad. Good for those younger buying houses, spending money. Your cost of capital is next to nothing. For retirees and those older, you who have a bunch of money and are looking for safe yield and return, it just doesn't exist. And a lot of people would argue too, that's why the stock market has done so well, is there's really nowhere else for money to go. If you have any more questions about this, definitely reach out to us. But I just thought I'd put, give you kind of a 10,000 foot view and put it, let you learn a little bit about it right now. Mark?
Thanks, Kenny. This week, for perspective, talking about huge companies because there seems to be a lot of them, and the big ones just seem to be bloating and becoming bigger and bigger. And so, to put it in perspective, a lot of people might have the feeling that, well, this is something new. The top of the stock market is dominated by just these massive companies that we all know. Chances are you own those brands in some form or fashion, but really, this actually is nothing new. If you look at this chart, the gray line representing what the single largest stock is in the stock market and how much it makes up of that, and then the largest 5 stocks and largest 10 stocks, you can see that the last couple of years, there's been an uptick predominantly related to tech stocks. No surprise there. And the tech stocks of today are doing things like enhancing the phones and cameras that we carry around in our pocket, or autonomous driving vehicles, or artificial intelligence and the like. But even if we look back in history, that's nothing new either. Tech has similarly made up a large piece of the stock market in the past. It just might have looked a little bit different, 50, 60, 70 years ago. New tech might have been around enhancing the light bulb and creating incandescent bulbs and fluorescent bulbs and then LED bulbs. Or in the past, it might have had to do with phone technology, moving from the in-house dial-up phones to the first mobile technology. Or in vehicles, it might have had to do with creating the first automatic transmissions. Those are all types of technology that have evolved over time. But where we are now in 2020, it just seems that that's standard, and it is in a lot of cases. But for perspective this week, huge companies dominating the market cap and the top ends of the stock market, it's really nothing new. It's just a return to what we've seen before. So leave you with that to keep it in perspective.
Thanks, Mark. This week, I've gotten a couple of calls about folks that are trying to get access to their funds, and I just wanted to kind of clear up one of the misconceptions that we've encountered a couple times. We have a lot of different ways, several different ways that we can get your money to you, or you can get money to us. But the one thing to remember is that it's not always an instant response that when we start to moving money. The most common way we have that we like to use is a move money authorization, where you link your bank account to your TD Ameritrade account, or there is also an electronic funds transfer process. Both of these are ACH transactions, and the thing to remember is that those transactions do have to filter through the automated clearinghouse, which takes some time. So that's an extra 3 to 5 days, depending on your bank. Some banks take a little longer to push things through. But if you're coming from TD Ameritrade, their experience rate is usually 3 to 5 days. Now, if you really need the cash in a hurry, we do have the ability to wire money funds around. It is a same day transaction, so we don't have to deal with that wait time, but there is still paper involved. So when you're starting to plan on come up, you've got money needs coming up, or you need to get money to us for some reason. It's think ahead a little bit and remember to allow for that extra processing time. We do the best that we can to get everything pushed through TD Ameritrade quickly, and they certainly expedite things when they can, but it isn't always just the push of a button as much as we'd like to think.
Yeah, that's a great reminder, is that, the cash is always readily available in there, but it's just about being able to get it from point A to point B, which can take some time because the banks have to talk to each other. So thanks for that, Lisa, and we hope everyone has a great weekend, and we will see you next week.